Hey everyone, I hope you had a great weekend. Now, getting into what we're covering in this video, we'll be going over the datasets, the earnings, and the SPY technical analysis for the week of June 29th, 2026. And just a reminder, we do have a holiday on Friday. That is, Independence Day on July 4th, which is on Saturday, but the markets will be closed on Friday as well as, many of the banks, yada yada. With that said, usually I stream Monday, Tuesday, Thursday, and Friday. This week I'll be streaming Monday, Tuesday, Wednesday, and Thursday. So I look forward to seeing everybody there at 9:15 a.m. And with that said, let's go ahead and jump straight into the datasets. Now for this week, we do have some pretty important datasets. For Monday, there's no data, and for Friday, there's really no data. But on Tuesday, we have the housing PMI, the housing composite data. Um, Not really too important. I'm not worried too much about that. But I am interested in the JOLTS job openings for May and the CB consumer confidence. The Chicago PMI is also a good data set, but it's not something I'm super interested in. But with the JOLTS job openings, we have been seeing the job openings basically continuing to fall and fall and fall. Um, with that said, the forecast this time is expecting, a whole 400,000 roughly, if I'm reading that correctly, 400,000 less jobs um, being open currently. So that's kind of troubling going into summer. Usually summer is when there's more jobs opening up. So the labor market is not out of the woods yet, as much as many of us might have thought it is. And the CB consumer confidence, this was pulled down under this 90 range for quite a while. It has been pulling back up, and the forecast is showing it pulling towards that 94.02, or 94.2, excuse me. I don't agree with this number. I think that very likely we will be seeing the CB consumer confidence coming in weaker. Um, we've been seeing prices moving up, inflation moving up, a lot of conditions that really don't bring consumers confidence. We've been seeing still weakness in the labor market, so I don't know where they're getting this forecasted number. I don't expect it to be this high at all. I expect it to come in, you know, basically at previous number, which was 93.1 or lower. So that's for Tuesday, and that's at 10 a.m. So 30 minutes after the market opens, we'll be very, very prepared for that. Now, for Wednesday, really big data sets. We have the ADP, if I could talk, the ADP non-farm employment change for June. And this isn't the weekly, this is the whole month. So the forecast on that is showing 118,000. Now again, this needs to be a lot closer to like that 250 to 300,000 to really be a, good quality employment market. Um, we have not seen that in multiple years now. We also have uh, the Fed Chair Warsh speaking at 9 a.m. So that's going to be interesting. I have no clue what he's speaking on. But that'll be 30 minutes prior to market open. So that will definitely have an influence on basically what's going on with the market. After that, at the 10 o'clock, so 30 minutes after the market opens, we have the ISM manufacturing data. Now there is the non-manufacturing data, but it looks like that's coming out next week. Usually it's all in the same week, but with Friday being a holiday, very likely it's going to be next week. Let's see. Yep, on Monday next week is the non-manufacturing data. So, okay. With that said, um, that's a very important day. So 9 a.m. again, we have Fed Governor Warsh. And then at 10, we have the ISM manufacturing data. I'm kind of glazing over the 9:45 a.m. global manufacturing PMI. That will be important, but I don't think it's going to really shake the market too much compared to the ISM manufacturing data. Now for Thursday, Thursday is the really big day this week. We have the NFPs, which is the non-farm payrolls. We have the unemployment rate. We have the U6 unemployment rate, which this is kind of the one I'm most interested in right now because this kind of tells the totality of um, people that are dropping out of the labor force, that are still trying to enter the labor force, all those different types of numbers rather than just the straight unemployment. And all of this data comes out at 8:30. We also have the jobless claims continuing, I don't know why I'm reading that wrong, continuing jobless claims. Those are very important. Let's see what the jobless claims have been. The initial jobless claims, which is, really surprising over the last few weeks slash months, it's been basically sitting at this 200,000, which that means per week. Okay. Um, However, we've been seeing the continuing jobless claims fall, and we've also been seeing the JOLTS job openings continue to basically say that positions aren't available. So are people just falling off the unemployment benefits? That's very potential, I think, at this point, because again, we've been tracking this data for quite a while. I've been tracking it since, early 2021. But over the last 2 to 3 years, we've been really seeing major shifts in the unemployment rate and the jobless claims, continuing jobless claims. And now I think this is kind of getting to that point where the continuing claims are basically tapering out. People are falling off of that and just kind of exiting the job market. Now, the U6 unemployment rate will kind of back that claim up if I'm correct with it, because it'll be still holding this 8.1% or even higher. So that's something very important to look at. It's also important to watch the participation rate because that's people trying to participate in the job market or, the labor market. So we'll see if this goes up or down. Very likely, I'm expecting this to tick downward. Um, and overall, I do expect kind of over the next 6 months that we're going to see a decline in the jobs again. Um, Especially if we're entering the summer with JOLTS kind of closing off. And again, this is for May, so we're still a month behind in the data sets, but this is still very telling. Okay, so that's kind of the data this week. Now for the earnings, there really isn't anything interesting going on the earnings side. Um, Basically, we don't have any major earnings this week. IPO, really nothing. I'm interested in that copper IPO, but I'll let them, you know, spend a couple months in the actual market before picking up shares in that. So yeah, it's a very busy week, but not a very long week. Monday is going to be basically a nothing day, and then all of a sudden we have Tuesday, Wednesday, Thursday with very important data, then Friday with nothing. So that's the data sets this week and the earnings. Now let's go ahead and jump straight into the technicals. Trading is a skill that can last for a lifetime. Join my Patreon for live classes, my personal market analysis, premium Discord access, and direct communication with me. Invest in yourself, become a more consistent trader, and build a better future for yourself and your family. Visit patreon.com/wooksy to join today. Thank you so much, and let's return back to the video. And getting into the technical analysis, we are going to be going over 3 different symbols today, not just the SPY. I'm going to be kind of correlating what's going on with the SPY with semiconductors and with tech, which is going to be very important in telling us kind of what's really going on. So starting with the SPY here, and I want to show the drawings, is that when we've had major sell-offs, we've seen the SPY been able to get underneath the 20 MA, which is this purple line. Okay, that's the 20-day moving average. And get to the lower Bollinger twice. Now, with this second push to the lower Bollinger, you see that on the daily time frame, we're actually far below the 50-day moving average. We talked about that in the video last week where we said either we were going to bounce at this 20-mile range to the upside or we were going to pull down and very, very likely push below that 50-mile into the lower Bollinger. Okay, but I want to show you this exact same move on the other two symbols as well. So going into semiconductors, we see that these major sell-offs, we've still been cruising upward. Okay, we have not even gotten close to the lower Bollinger. The last time we were close to the lower Bollinger was back in, um, late March. But ever since then, semiconductors have just been absolutely ripping. And that means that every time we've pulled down to this 20-mile range, we've found major buying to the upside. Now, one thing that I want to show with this 20-mile is that with this being at the 20-mile, look at where the SPY is on these charts. Well, when we talk about the lower Bollinger here, that creates conditions for upside. Okay, that creates conditions for upside. So potentially we can have another bounce again. Okay, this is kind of that mean reversion type trade, exactly kind of what I look for. But this is telling us that semiconductors, if we don't see basically a really large leg downward, um, we're going to basically have another bounce to all-time highs again. So that's something that's a huge potential here, especially with the SPY being in the lower Bollinger currently. I think that the potential for a bounce to the upside is very, very, very large. Now, I want to show you the same thing on QQQ. And with QQQ, we did not push into the lower Bollinger again. We barely tapped the 50 mile, but we are slightly above it currently. So what this means is that technically, tech can pull down towards that lower Bollinger, which can give us more of that downside push within semiconductors. And that would cause the SPY to push downward even further as well. Now, one other thing that I want to show on the SPY here, which is a little different on semiconductors and QQQ, is that we actually have a really well-formed selling channel. Okay, and in this selling channel, this is telling us that very likely the SPY is going to pull up towards the top of that channel and reject down again. Rinse, repeat until this channel is broken. Okay, now we have plenty of room to the downside, but we still have to respect the channels and understand that with this being in the lower Bollinger currently, that we have a very large possibility of having a bounce from that range. Okay, and that bounce would still be, it might look bullish, but it would still be bearish. Okay, so when we get towards that 744 range, assuming we do, um, I'll be definitely loading up on a lot of the dated shorts. However, we don't have this selling channel within semiconductors. This selling channel does not exist currently. It is currently a buying channel to the upside. So that buying channel has to be broken before we can really expect major selling to occur. And this buying channel basically looks like that. So it is very close. It can break, but we have to really correlate QQQ, SPY, and semis together. And that's showing that SPY is potentially giving us a bounce. QQQ still can slump to the downside some. Potentially there's this inverse cup forming here. So this is something that I'm going to be looking for over the next few sessions to see if that actually occurs or not. If not, then we do have the room to push to the upside again. Now, there is a very nice selling channel here on QQQ as well. Let me change this to blue, which, that could be telling us that we're going to have this slight push to the upside, get that bounce with SPY, and then pull down to that lower Bollinger and 50-mile range. But I do think that the market is trying to pull down. Um, I know that some are expecting July to be very, very bullish. Usually it is very bullish, but we do have to understand that the technicals right now are telling us some different signals. If you look on the ADL has been heavily ticking downward over the last few weeks. Okay, basically since the beginning of June, it's been just ticking down, ticking down, ticking down, which means that money is flowing out of this symbol. Same with semiconductors. Doesn't look like it, but ever since basically the exact same date in June, we've been having ticking down, pulled up a little bit, ticking down, ticking down, ticking down. So it hasn't pulled all the way to that low, um, where it was when we hit below that 20-mile range prior, but we're still seeing money being pulled out of this symbol. So if they decide to pull money out very, very quickly, you could see how fast this was elevated. I mean, this was the beginning of April all the way till now. This can pull to the downside just as quickly. Okay, so we do have to be very careful with semiconductors, even though they're looking very strong. And with the SPY, it's even more aggressive. We see again since that beginning of June, the ADL has been ticking down, ticking down, ticking down. Okay, so unless we see some major, major reprieve, and that means that we'd be seeing SPY breaking above the selling channel, we would be seeing semiconductors having a massive bounce to all-time highs again, and we'd be seeing QQQ basically breaking out of the selling channel. Then it's hard to be very bullish right now. Now, one thing that I am seeing on QQQ is that with these squares, you can actually see an inverse head and shoulders forming. But at the same time, this can be a double top slash inverse cup and handle. So the next few trading sessions are going to be very, very important in telling us exactly what's going on with all these symbols. But we do have to correlate them all at the same time because, for example, SPY is showing that we're in the lower Bollinger. Very likely we're going to push down one more day and then have the pull up. Well, with that pull up, we need to determine if that's going to be bullish liquidity or bearish liquidity. Well, if it breaks above this selling channel, then we can start looking towards the bullish side again. Doesn't mean you can't get positions at the lower Bollinger to, grab that upside. There's going to be quite a bit of upside to take, but we have to be careful, okay? Especially when we're seeing a lot of pretty negative conditions occurring. We're seeing the conflict with Iran potentially starting back up again. Over the weekend, I believe 2 tankers were attacked by the Iranian Guard. Um, so with this conflict starting back up again, we can absolutely continue the selling. So just something to be aware of moving into this week, even though it is a shorter week, it's going to be very, very important for kind of, preparing the next couple months because either we're going to be seeing these major bounces to the upside, breaking some of these selling ranges, or we're going to really start seeing the market dump. Okay. Now, one other thing that I want to show is the weekly time frame. Now, on the weekly time frame, and I'm going to hide the drawings here, and we're going to hide the Bollingers and just show the 20 mile, is that we have a lot of room towards this weekly 20 mile. And this weekly 20 MA on the daily time frame basically pushes us all the way down well below the lower Bollinger. Okay, and we see this on semiconductors. Semiconductors have a long ways to fall. We see this on QQQ. If I can find it, 1 second. And on QQQ, there's a lot of room to fall, but we can see how the ADL has started to pull down on the weekly time frame. We see this within tech, we see this within semiconductors, and we see this within the SPY. So if we see this continuation starting to occur to the downside, then absolutely we're going to be seeing a ton of downside weight taken. Now with SPY here, another thing that I want to highlight is that we did close this inverse cup. And from closing that inverse cup, this bounce can turn into a handle for that, okay, to continue to the downside. So that's something to be aware of. And this selling channel can expand to the downside. So don't think that we have to just ride down this channel. It absolutely can open up further to the downside. So we just have to be prepared for it. Yeah, that's kind of what I'm looking at for this week is that really I'm not going to be setting up a lot of long-term positions. Um, I'm pretty much shorting oil still right now with hedges in that. I have some other symbols being traded, but overall I want to not wait on positions. I will take a couple positions, but I'm not going to go very heavy expecting some crazy upside here, even though we see SPY at the lower Bollinger. Um, because again, some of our other signals are, or some of our other symbols are telling us that we absolutely can still be selling down a little bit further. Semiconductors, they've been in a massive buying channel for, roughly 3 months now. We definitely have the ability to break this channel to the downside and start heading down within semiconductors. And if that happens, that's going to absolutely pull the SPY down a massive amount. And just remember, we dropped all the way down to the 627 before we had the news of the ceasefire, and then all of a sudden we shot up basically to the 758. A lot of this weight can be sold off very quickly. A lot of this weight on semiconductors can be sold off very quickly. So that's what I'm kind of looking for this week. I'm not expecting a massive sell-off this week. Um, but I wouldn't exactly place it out of the cards either. Now, with this reprieve on SPY, it might just be a very quick reprieve. It might be, multiple weeks. We'll have to see. Especially if we get good news out of the conflict. That can definitely help the market quite a bit. But currently, I'm being cautious, but I will position a couple long calls to the upside for SPY. Um, or, some SPY related ETF, something like that, just to catch this lower Bollinger mean reversion trade. But overall, I am still seeing a lot of bearishness. We have been seeing the selling picking up quite heavily. And we've been hearing from a lot of different fund managers that um, they're pretty much ready to sell out of all their US equities right now because they're just not seeing very quality long-term holds being done right now with all the conditions. And another condition that I think many people are forgetting is the Bank of Japan slash BOJ, whatever you want to call it. But going to the yen, if I can find the symbol, the USD JPY is that every time we pull up to this level before, we'd have the Bank of Japan intervene and cause a massive sell to the downside. That arrow can be deleted because they did not do a massive intervention there. They were starting to intervene a little bit prior to the war, But ever since then, they've had to basically put that on hold. Well, the yen is at the lowest point it's been, at least that I know of, which means that a very, very large yen intervention can be cooking up, which is why I have these FXY positions for September. FXY is the yen, kind of like how DXY is the dollar. FXY is basically at the lowest point it's been. So I'm really expecting a intervention to occur pretty soon here. Okay. Now, when they intervene, what that means is that they're going to be selling off US equities, crypto, basically whatever securities they can sell off to buy that currency, which is the yen. Um, so my positions that I have in FXY are the 58 calls for September. I think it's September 18th, if I remember correctly. Um, but that will catch this yen intervention very, very well, assuming, it happens in that time, which usually happens between that August to September time. So very likely we'll catch that. If we don't, then I'll extend these positions out to December. But currently, I really like the September 58 calls for that. Other positions that I'm in, currently in drip. Now with drip, we do see that we have been starting to see some very quality buying. We do have this small cup with a handle forming here, and if the conflict doesn't start back up again, then very likely we will be pulling up towards this range where we've seen it trade before, between this, 740 all the way to the 1724. I think that's very, very reasonable. Um, so that's what I'm looking for. Now we did not break down below that 374 range, so those positions are good. I do have 5 puts hedged against the 5 calls. And again, the 5 calls that I have are for September. The puts that I have are for September just in case the conflict decides to start back up. The, Strait of Hormuz ends up getting closed again. And, you know, we do this whole cycle over. So I am prepared for that, but I am expecting overall oil to continue pulling down. So that's what I'm looking for this week, everybody. Um, Other than that, I hope everyone has a great rest of their weekend. Hope you have a great week, and I will be streaming again Monday, Tuesday, Wednesday, and Thursday this week at 9:15 a.m. I look forward to y'all joining me there. But other than that, have a good one, and I'll see you in the next video.